video. Now today we're going to look at some FX pairs that we can add to watch list, and the pair that we are going to be targeting this week is going to be the Canadian dollar, because it printed some very bad fundamental data last week. Now if you are new to the channel, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm, and as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now firstly, what I mean by poor fundamental data is we had the CAD unemployment change and the unemployment rate. Unemployment change came through lower at 15.3k, which was probably half of what the expectation was, which was very bad. However, we saw the unemployment rate drop from 5.3 to 5.2, which was probably okay to see, but it's still a high number. NFP, a lot of people were asking about the NFP yesterday, so I've done an analysis to say that we can expect the NFP to be negative. However, I'm not sure if this number was correct over here. This 428 that was received, because it's the same as, yeah, it was 430. The previous was 438. Yesterday we got 428, if I'm correct. The unemployment rate is still the same. The average hourly earnings dropped to 0.3%, which is quite bad because of the inflation, not the inflation, but the interest rate that was increased. We're not here to speak about the dollar. Overall, this news was not as good as we would have loved to see, because even if they increased or added new people or got new people employed, the unemployment rate is still the same compared to what it was in March, just telling us that they've basically done nothing other than focusing on increasing the interest rates. So we're going to start with Gbp Cad. Also, the CAD has been ranked the worst performing currency for this month, or for Friday, purely based off when the data got released. The euro taking the first spot and the Canadian dollar taking the last spot there as well. It's good to see the euro finally coming to terms. In any case, so let's start with the analysis. Now the Usdcad, quite interesting, this move, just by looking at the price action and just thinking about the fundamental data that had pulled through for the dollar. This move to the upside, 100% expected. Very important to keep in mind, the market is currently is about to test very strong level of resistance. This level over here acted as a strong level of support. Market broke below that, so we can definitely expect the market to continue higher, go and test that level, and can potentially break out of that level this time around, because we do expect continuation in the interest rates to continue, and hopefully CAD will be able to produce some better data for next month there as well. So there's a good buying opportunity for us to go and see the market test that previous level of the resistance over there, acted as support, now going to test it as resistance. Now from a daily time frame, what do we see? Now here on the daily time frame, the market is here about to break above this level. Now it's very easy to trade a market that's sitting this close to the price action. We obviously expect a break to the upside based off last week's close. We can see how the market had broken above the strong level of resistance. All of that resistance is now acting as support. Now we have this massive impulse that we expect the market to pull back to. We can't measure the retracement because we don't have the confirmation yet, but we can definitely expect this market to pull slightly higher, pull back, and then continue higher to come and test this level of support that was once resistance in the market, purely based of the positive data received for the US and the negative data received for the what you call it, the CAD. Next up, we do have the Eurocad. Definitely a pullback expected in this market. Firstly, we can see here from a monthly perspective, the market is currently testing strong level of support. The market also printed this massive impulse, and after an impulse, you expect a correction. The best way to measure that correction is by taking your Fibonacci from the high to the low. We do have a 50% pullback that's lining up perfectly with this previous level of resistance. Support that is now acting as resistance. Definitely a good long-term buying opportunity for us to see the market go and test that 50% retracement, also for the market to go and test that previous level of support that is now turned resistance. Now from a weekly time frame, we do have this market currently testing and slightly rejecting this previous level of support over here that is now testing as resistance. Now we obviously need to wait for a clear break above that from a daily perspective. Now if you drop down on the daily time frame, what do we see? Now here on the daily time frame, we can see how the market has just completed this W formation, because this level over here is acting as a level of structure. Now we can see that the market had just reached this level of resistance over here. Now the market printed this W formation. After a W formation, you expect to pull back to the neckline before the continuation to the upside. The market also printed this impulse. After an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci from the low to the high. And we once again have a 50% pullback, so lining up perfectly with the neckline of the W formation. Now going into next week, we can definitely expect this market to pull back from exactly where it is now and then start that continuation to the upside. Now there is a long opportunity for you to continue this move to the upside, but as retail traders, we know we don't have that patience, so we're gonna ride the wave up until there. Next up, we do have Cadjpy. Now starting on the monthly time frame. Now the Canadian dollar. Now the Japanese yen has been very weak in the past couple of months, well, last month going into this month. So it's very important that we are very careful with this, because although the Canadian dollar, it didn't produce some good results, the Japan yen is also not doing that good. So you could potentially see this move continue higher firstly. But if we start here on the monthly time frame, the first thing that we can see over here is that the market had last month, and I want to use an array tool with a magnetic tool over here just to make sure that I get that accurate level of resistance. So you can see obviously that the market had reached this previous level of resistance that it had tested in the past, rejected close below that level. On the weekly time frame, what do we see? Now from a weekly perspective, the price action is quite choppy because we don't have any clear confirmation over there. We have this massive impulse. After an impulse, you expect a retracement to at least a 0.382. And if you take your Fibonacci from the low to the high, we can see here the 0.382 is sitting at this level where we can expect the market to pull back to as well. Now from a daily perspective, what do we see? Now here on the daily time frame, the market had been trading quite sideways for the lateral part of the time. The lateral part of what we have over here. So this is basically just a consolidation phase that the market had came into, and the best way to approach the situation is we need to wait for the market to break below that level, and then on the retest we could potentially look for short-term opportunities for the market to go and test that previous level of structure that it created there as well. And that's because we expect the Canadian dollar to decrease in value over time. Now the Australian dollar also not doing very good this week, but because the Australian dollar is well overvalued against the Canadian dollar, we can definitely expect a pullback from this currency as well. Start on the monthly time frame, we can see the market just printed this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now from a weekly time frame, we can see that we have the potential of the market printing this information. Now that information after the information, you do expect to pull back to the neckline before that continuation. We also have this candle with this long wick that you normally expect the next candle to fill in the wick, because that's just a retracement on lower time frames. Now next thing what we can see over here is we have this massive impulse. After an impulse, you expect a correction, and we got the correction. Now if you take your Fibonacci here from the low to the high, you can see how the market had tested and rejected the 61.8. Now if we need to get that target level over here, we can see how the -27 is lining up with that structural level over there. Now there is a high possibility that we can expect the market, that we can see the market continue higher over here. Also excuse me, also if you let me just do that quickly. Yeah, so you can definitely expect this market to continue higher from this level over here. And if you do look left over here, you can see that we do have this we do have this structure that the market had also now broken above and tested it as a strong level of resistance in the market, or support in the market there as well. Next up, we do have Nzdcad, also been very bearish against the Canadian dollar. Firstly, market is currently trading at a strong level of support. Once again, we can expect that pullback potentially to see the market go and test this previous level of support that is now acting as resistance. From a weekly perspective, what do we see? Nothing. We see the same type of price action. So the market had closed within a, we call this a indecisive, or a indecisive candle, which looked like it was ranging last week exactly. So we can see over here base of last week, so we basically was just stuck within this consolidation. Again, going into next week, there's definitely, we can definitely expect the market to go and hit this level as well. Now it would be very nice for us to basically see that the market go and test that level, and then further potentially break out of this consolidation phase. Let's just go left here. just to see the market potentially break out of this consolidation phase and then get in again on the retest there for the market to go and test that previous level of support that is now acting as resistance as identified from a monthly perspective. Next we do have Cadchf. Now on the monthly time frame, what do we see? Now from a monthly perspective, the market is testing very strong level of resistance. This level over here acted as support, resistance. The market is back to test it as resistance. We can definitely expect a pullback to this level before that continuation to the upside as well. Now from the weekly time frame, what do we see? Now we can see over here we have this massive structural level that the market had printed. Now all of these levels acted as a strong level of resistance, and once resistance gets broken and becomes support, so we can definitely expect that pullback before the continuation to the upside as well. Now from the daily time frame, what do we see? Now here on the daily time frame, we have this overextended W formation that we can definitely expect the market to come back to before that continuation to the upside potentially. Now the best way to approach the situation is to obviously wait for the market to pull back to this level and then monitor the price there once again to see if we could potentially see this market continue lower and lower and lower once again. Now next up we do have Gbp Cad. Now Gbp Cad starting on the monthly time frame. We do have Gbp Cad holding on live support, no pun intended, because the market is trading at support, but this market had been stuck within this consolidation for almost, this has been a very long time here as well. This market started this consolidation in 2016 and it had been moving sideways since 2016. Now we at this level once again, telling us that we can definitely expect that pullback to this level over here, because this level over here acted as a strong level of support. That support got broken and it's now acting as resistance once again. So we are going to use this as a long-term target, drop down to lower time frames and look for short-term targets in there as well. Now price action is the same on the weekly time frame. We can see all of this support that the market had held on to. On the daily time frame, what do we see? Now from a daily perspective, the market has just printed this overextended information. After an overextended information, you expect a pullback to the left leg before the continuation to the downside. But because we're looking for buying opportunities, this level of support that got broken, that is now acting as resistance, we need to wait for a clear break above that level. Then on the retest, we can definitely start looking for long-term buying opportunities, potentially to that level over there. In doing so, the market would then print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now that's all from my side. Thank you for your time. And as always, cheers for years.